Hi everyone. In this video, I'll be talking about the steps to start investing or trading in the markets. So you finally decided you're ready to start investing. You probably have dozens of questions about how to actually start. I'm here to help with that. In this video, I'll be giving you a step-by-step guide on how to start investing or trading in the markets. So before I continue on with this video, it's important to note that this step-by-step guide is only applicable to the US markets. So, why should you invest in the United States? So, you should know that anybody can invest in the US regardless of what your status is. Whether you're a US citizen, a foreigner, or not a US citizen living in the US, you can still invest in the United States. So, the US GDP is 25% of the entire world's gross domestic product, but the stock market capitalization is 45% of the entire world. In the US, it's easy to invest your money in the markets, and it's also easy to withdraw your investment as well. The US also provides you with reliable economic data for you to base your investments on. The United States dollar is also a very safe currency to invest in. It's actually known as the world's reserve currency. About 1/3 of the world's countries use the United States dollar as their official currency, in fact. Most foreign currencies are also devalued against the dollar over a period of time. So what this means is that in the foreign currencies, your money is worth less and less over the period of time. So step one. So the first step is to select a brokerage firm. So some popular brokerage firms out there are Charles Schwab, E-Trade, Fidelity Investments, TD Ameritrade, and Robinhood. There are so many more brokerage firms out there, and you can find them out by just simply Googling it. So it's also important to know that you need a brokerage firm in order to be able to invest in the markets. So each brokerage firm has its own fees, software, terms, and conditions. So you should review this before continuing on with the remainder of the steps in this video. So the most important thing to know about brokerage firms is that your account is protected by the Securities Investments Protection Commission, also known as the SIPC, for up to $500,000 for each account. So step two, determine what type of account you want. So there's two types of accounts, an adult account and a custodial account. So an adult account is available to anybody over the age of 21. This account will give you the ability to buy, sell, short sell, and buy to cover stocks. This account also gives you the ability to trade ETFs, commodities, options, and other securities, if allowed. We'll get into this a little bit more later. So the second type of account is the custodial account. So if you're under the age of 21, you must open this type of account. An adult actually must open this type of account for you, and what will happen is you'll have a joint account with this adult/guardian. There also may be some restrictions on this custodial account on where you're able to trade. Step three. The third step is to determine whether professional advice is needed or not. So for this, there's also two different types of accounts. You have a self-directed account and a full-service account. So in a self-directed account, you make all the trades yourself with little to no commission per transaction. On the other hand, in a full-service account, this account is recommended for inexperienced investors because you get a dedicated broker to help and guide you with your investments. Due to this, there is a higher commission per transaction fee than the self-directed account. Step four. The fourth step is to determine what type of brokerage account you want. So after deciding if you want an adult or a custodial account, you'll have to decide if you want a margin or a cash account. So a margin account gives you the ability to borrow money against your investment from the brokerage firms. So it gives you the ability to leverage your funds and returns. So in this type of account, there's also cheap to no interest rates. On the other hand, a cash account, the broker will not lend you money against your investments, so you will not get the ability to leverage your funds and returns. So step five, determine what investment categories you want to invest in. So there's 6 types of investment categories. stocks, bonds, currencies, commodities, precious commodities, and interest rates. It's also important to know that commodities, precious commodities, and interest rates are also known as futures. So step 6, select and fill out the applicable application forms. So one application form is required to be able to trade stocks and bonds. Another application form is required to be able to trade commodities, precious commodities, and interest rates. Another one is required to be able to trade currencies. These 3 forms will give you the ability to invest in all 6 different categories. Additionally, there's also an additional application that you need to fill out if you want to be able to trade options in each of these categories. So step 7. The 7th step is you should connect your bank account. So bank account is required in order to start an account for investing. So this account is used to be able to transfer funds to your account and to your bank account. A bank account is also used for fast and easy transfer. So the last step is to get started. Start investing. You probably have a lot more questions about some strategies or ideas about how to start investing, and I'll be here to help you with that. I'll be making a series of videos about investing. In fact, my next video is going to be about ideas to follow before you start investing. So please make sure to like and subscribe to my channel in order to find out when that video will drop. So as always, thank you and good luck with your investments.